commentary for Monday the 20th. We are 11 days before Halloween, and we have had some amazing trends that I really am excited to share with you, and I think are going to be really helpful for you if you're looking to be an active trader into the end of the year. So with that said, let's talk really quickly. When is this economic expansion going to end? I'd like you guys to give me your best guess. When do you think this economic expansion is going to end? And nobody knows, so it's not like we have a finite answer. Ooh, Stuart had a great answer. Mid-January. Any other thoughts? My answer would have been mid-February, like this year, where we had that 21% drop down from mid-February down to August. Amazing rebound. That would be my expectation. Any other thoughts? Boy, I think mid is the key, right? Mid-December, profit taking, 100%. I could agree with that one as well. So I don't know where we're going to stand all completely here, but we all seem pretty darn close to more or less after this earnings season, right? So after this earnings season slash Christmas rally slash catch up trade, where peoples and advisors are like, I haven't done as well as the market has done. With that said, my thought process, Abraham, I saw that. I just hadn't gone through it to run through any of the numbers to verify it. I'll probably use that next week. Thank you. My expectations. Micron, NVIDIA, Apple, Google L, Meta. Let me take a quick peek at my list. Apple, Boeing's just that. Bank of America, Disney's okay, Google L, Martin, Meta. Oh yeah. MicroStrategies. Palantir. We will hopefully be called away on all of these positions for a huge profit over, no, I should say end of November through beginning of January. That is my thought process. We have some short calls that we have in place or that we will be putting in place to be getting out of all of these positions. And the key word here, huge profit. Micron will be posting like a 400% return on our individual entry points. Palantir, at least 100% return. MicroStrategies would be a 220% return. Meta, we're looking in that 300 to 400% return on spreads Google will be 100% return. Apple will be about a 250% return, but over 2 years. NVIDIA, I actually didn't calculate it, so I don't know. But couple keys here. Huge profits doesn't mean these stocks can't go higher. So we will take 20 to 30% into a leap bull call position for next year. What does that mean in English, plain English? We're going to do a stock replacement strategy for dirt cheap with a protection position as we start the trade. So we're just going to take a bit of those profits, and what we're going to try to do is mirror the stock ownership with option contracts. And we're going to create a stock replacement strategy where we're going to cap us on the upside, but give us like $100 of running room so that we'll have a protective position in place so that if mid-January, February, we see that drop that we're expecting, we're good. We'll have a position to make money on the way down. We'll cash that in for a run back up through the rest of the year. And we are planning for the future today. And we're literally planning outwards of a year and 3 months into the future, or 15 months into the future, looking at these huge profits, choosing to book the majority of them because we will have long-term capital gains on a good portion of them, and creating a cheaper, less risky stock replacement strategy that will still make the next $100 upward. It'll still make some money there. So the big question again was why? Cheaper, less risk, and still can capture the next $100 higher. That also means we will be in a cash heavy positions in accounts. Okay, big drop on Tuesday, big drop last Friday or the Friday previous. What was the drop on Tuesday for? Tuesday drop last week. It was a drop of, I guess it wasn't that bad, was it? Where's the drop? Oh, I guess it was Thursday. The drop on Thursday, not Tuesday, it's Thursday. The big drop on Thursday of last week. What was the drop from? It was pretty specific. No, the more trade war was the Friday before. And that would have been October 10th. China trade war. What was it last Thursday? We were up over 1%. We ended up finishing today down at 0.63. 3 trading days ago. Going once, going twice. Anyone? Not rare minerals, but that is a good guess. That still somewhat goes with the trade war. There is a big announcement. It was banks, primarily regional banks, with a higher than expected loan default. So there's a higher than expected loan defaults on the big banks level, not Bank of America. Bank of America knocked it out of the park. But when this was mentioned, all banks took hits 4, 5, 6, 10% on last Thursday. Somewhat kind of sucks. I thought it was pretty interesting because Zion today, my regional for the Western United States, Zion's Bank posted $1.48 versus $1.46 earnings per share, and revenue at 872 million versus an estimated 843 million, with no increase in loan defaults. So I wonder what last Thursday was that spooked the banks. I really have a hard time finding the regional bank or banks. That might have been Morgan Stanley, but this came out and it hit the banks like a ton of bricks. Good to see some of them recovered on Friday and today. Okay, I found it pretty interesting, a little information here. This week's earnings and the catch-up trade is in play. Why am I saying that? Go big. After the stock reports. Last week, the market pushed higher, except for Thursday. We opened up on Monday, 1.47% return to make up for the 2.5% one that we lost on Friday. Hurley Investments was 1.81. We beat the market that day by 0.34 tenths, or 0.34 tenths, 3.4 tenths of a percent. Tuesday, market was up. Well, the market was down 0.16. Don't worry, Hurley Investments was down 0.55. We just gave all of our profit back. Wednesday, market was up 0.4. Hurley Investments is up 0.72. We got that 0.32% back on the market. Thursday, the S&P was down 0.63. Hurley Investments was flat. We're actually up 19,000. It just doesn't register with how much money we have under management now. So we're now beating the market by 0.95. And then on Friday, S&P was up 0.53. Hurley Investments was up 0.73. We beat the market by 1.13% last week. The market movement down came up. The market, especially yesterday? I can't remember what day. It was probably Friday. Friday, the market was down 0.68 at about 3 in the morning Mountain Standard Time. We finished Friday positive. There are a ton of money managers that are nowhere close to the 15%-ish return that the S&P 500 has given us year to date. We're probably going to have 3+ years of a 20% return on the S&P 500. That is amazing. I think it's happened one other time in history, which means when we do have our market correction, it will most likely, yes, be more than 20% and could be as much as 35 to 40%. That is normal when you have an 80% growth over 3 years. The next 2 years, you're looking at giving half of it back. It's a market cycle. Things seem to be happening quicker, which means, yes, we might have a 40% drop in 1 year to make our market cheap. It's stupid. I understand. I'm not saying the markets are smart, but we could see that 40% drop back next year. Then our markets are cheap and we get to move higher from there, giving back part of that 80%, or well, it's not 80, it's really 70. 2, 3, 4, 6. Yeah, it's like that 70% gain. So it's not 40, it's probably in that 30 to 35% range. 78, 34. Yeah. So it'll be somewhere in the mid 30s to take back half of the gains we've had in the last 3 years. That's what I'm trying to say. The good news is our first week in on earnings, and again, it's only a week. It's not a ton. Come on. But tailwinds in equities optimized regarding the third quarter corporate earnings, but 12% of the S&P 500 companies having reported so far, 86% have delivered a positive surprise, which is above the average of 78. 84% reported a positive revenue surprise, which is also above the average that I believe is closer to 75. So in our first week of like pre-earnings, because it's typically Alcoa that has its earnings on Wednesday. So the short answer is for the week and a half or 2 weeks with the banks, for the first 2 weeks up to this Wednesday, positive earnings of 12% of the S&P 500 were above average on both earnings surprises, earnings per share beats, and revenue beats. That's pretty darn positive for, and I'm going to call it what it is, the fake news that tariffs are killing us and we're doing this, we're doing that. You've got to work your numbers and then justify for yourself if the numbers are correct or not. Okay. Amazon. AWS. Amazon Web Services is sucking it again. This was the problem we had with Money Block, those 5 brokerages, Apex Clearinghouse that shut down an arm or a feed for the NASDAQ. The AWS is all over the government. It's all over corporate America. It killed us for 4 weeks and a couple days. Good thing is we know how to trade. We can call our orders in. Well, thank you for Money Block for bending over backwards. We actually doubled the S&P growth that month almost. It didn't affect us at all. But we were shut down and they had to find the breach. And they had to find out how it happened. And they had to make sure no information was taken. They had to make sure no money left. That's why everything shut down. It wouldn't open up. This I found out today around 9:30. Market was open a couple hours. Had to turn in a chainsaw to my Linden Nursery in Pleasant Grove, Utah. Kevin, we can't. You know, I know you need some chainsaw oil and gas for your boy to cut down some trees. We can't run cards. Our whole system's down. I think it's Light Quick, and it was Husqvarna. Some other names that were shut down: Amazon, Snapchat, Disney, Reddit, Canva. There are some more I read. Lyft, McDonald's, New York Times, Ring doorbells. Robinhood was shut down today. United Airlines, T-Mobile, Venmo. I couldn't Venmo anything today. Delta Airlines. I mean, this is hitting everyone everywhere. Lloyd's of London's banking group. It is everywhere. And someone said, well, Damn it, they have hundreds of thousands of servers. They make trillions of dollars. Why can't they just shut one down, copy and paste the files, open it up on another server? The key is how they got in. And you can't open it up allowing a breach. This can be huge. This could kill Amazon for years into the future as they have to find out how people are getting in so easily. What's going to happen when they take people's money out of it? How are they going to work on having it protected better? It's great. MoneyBlock shut it down. They cut all the feeds off. There was no way anyone could be affected on our side. This is huge. It's a major hit, and Amazon is going to pay through the nose for having the system, but not having the security to back it up and protect it. Amazon is probably not one of the positions you want to be in the Mag 7. Not only did they not make money for years, but this will be something that most likely for the next year or more, as it's hit big companies, that we're going to see a huge hit on Amazon. Please keep that in mind. Okay, shutdown. We still have a shutdown due to the Affordable Health Care Act, or Obamacare as we knew it previously. This is a Democratic shutdown. What is the problem with this shutdown? Can someone politely give me a comment? Okay, well, yes. Problem: no Fed government employees being paid except for Congress, meaning both the House and the Senate. That's kind of bullshit, right? Egos, maybe. I mean, do we really know? Egos or disdain for Trump. Let's just call it what it is. But there's a main problem here that I'd like hopefully everyone to understand and know about. I'm going to make the comment. You guys are free to bash on me all you want because I love you guys. Problem: this isn't the way to move what we call move an act. What do you want to call the Political Care Act? To move legislation. Sorry, I couldn't remember the word. Legislation forward. You don't do it by shutting down the government. The Republicans showed you that over a wall. Does anyone know how you move legislation forward? Actually, it's not talking, but that is how It should work, but it's not. The process is an appropriations committee that then brings it to the floor as an act, a bill, debates, and voting. That's the way it goes. It can't even start until a small committee says, hey, we approve this, both Republican and Democrat, we approve it. Let's bring it to the floor to present it as an act or a bill, to construct the language we want in it, to then vote on it and then approve it. That's how legislation moves forward. We're fighting over anyone know? We're fighting over $1.29 trillion. And no, we're not fighting over the Affordable Care Act. In fact, we're not even fighting over the tax credits that will most likely be extended if these numbskulls can sit their butts down and do what the hell we voted for them to do, and that's work it out and put a bill out for us. But we're really fighting for 1.29 trillion next year. And does anyone understand what part of that is in the Affordable Care Act? What part of that 1.29 trillion is actual Affordable Care Act money? Does anybody know? What part of that is actual ACA money? Going once? Going twice? 35 billion. Kevin, you're full of crap. I'm pulling this from the original Affordable Care Act. I'm pulling this from CNBC. I'm pulling this from the Fed.gov healthcare website. I had this article that came from AI Overview, which was the best and the easiest to understand from all those damn large words that are used, right? The subsidy cliff, 400% of federal poverty line, which is considered $42,000. But here's the key that's surprising. The CBO estimates that making the enhanced PTC permanent would increase the federal deficit by nearly $350 billion over a decade. Which roughly comes out to, and I ran my calculations, it actually comes out to $33 billion next year. But I can't prove that, so I have to say 35. So here's my question for you guys. If appropriations decide to make those tax credits permanent, it's 350 billion over a decade. Why the hell do we need $1.9 trillion next year? I can't do the math. You know what I can do? We are deficit positive. We are spending less than the money we're taking in right now, and not by a huge number, but by about $180 billion. And it's only going higher because we're not paying federal employees right now. For the first year in forever that I can remember, the Clinton era, but I didn't understand that we were borrowing from the Social Security. But for the first time that I can remember, we're paying down our deficit, and the government is spending less money than we're taking in by roughly $180 billion. With tariffs coming up, it might be $300 billion by the end of the year. We're going to pay down the federal government's debt by $300 billion. It's a drop in the bucket. I get it. But that beats the hell out of blowing past it by $1 trillion. There is no reason why we need a $1.29 trillion increase in the Affordable Care Act to keep what's already in place when it will cost roughly $350 billion for the next 10 years. Let those numbers sink in. Earnings, we have earnings coming up. Here is our list. For the majority, for what we're watching, Lockheed Martin on Tuesday, Chubb on Tuesday, GE on Tuesday, General Motors on Tuesday, GE Venovo on Wednesday, Freeport McMoran and Ford on Thursday. Next week, big tech week. Next week's big tech. With that said, yes, we do have some tech into this week. Let me run down to earnings so we see it. Tech this week, Netflix on Tuesday. Where is, Tesla on Wednesday. So those are the big tech this week. We do have a lot coming on. Do read through the big picture. Again, it's all about earnings. It's obviously pretty neat that we're expecting a good run into the future. Disappointing earnings guidance need not apply for the job of keeping this bull market going. It's going to go forward. Looking at the Dow, we are bullish slightly. Little reset last week on 2 weeks ago, Friday, whenever the heck I told you it was. Touched the 50-day, running back up. S&P 500 bullish. We have more room to run because of a single 2.51% down day. Held the 50-day simple moving average. NASDAQ bullish. More room to run. We look excellent. Where will September end? Where will the S&P 500 end in October? We're still going with 2%. I can move that higher. Economic reports. Not much is happening. Have our government shut down. Leading indicators won't come out. It's funny because MBA, existing home sales, some reason I saw on Friday that possibly CPI and core CPI might come out. I don't know where I saw that or why I saw that, but I'm putting it in there with a bunch of question marks. How are we looking to trade? Time to protect for earnings. We do have full callers on a couple of our technology so that we can get called away the 19th of December. That's kind of where we're looking for some of our technology. Interesting article on a NVIDIA, Microsoft, AI, and BlackRock packed a $40 billion deal for aligned data centers. It's interesting. This time around, this is the first time I'm seeing so many technology companies working together. The essence of an Apple creating dominance, which they had for decades, that's going bye-bye. That is not happening anymore. We are seeing big amounts of companies working together. And if Apple doesn't join on it in the near future, it's definitely going to hurt them. But a very interesting article, 40 billion is not chump change. Looking at 4 different companies working together in the same field, that is awesome. Who will lose out when the ACA health insurance subsidies expire? Really, if we get our government together, I don't think this is going to happen, but this was an article presented by one of you to me. Thank you very much for doing that. It's an article that helps try to describe it in a little bit better sense than I am. I will make sure I have this available for you guys so that you can see it and read about it. In all honesty, I would expect this will get done. It will probably be a problem in December and they've got to go on vacation. It'll be an end of the year or a beginning of next year. Extend those tax credits forward. The reason why, it's so little. It's 33 to 35 billion dollars. No one wants to lose an election over so little. All righty, moving on down. Very interesting article. You guys want to know, I think crypto is the biggest hoax in the world? Stablecoin, directly tied to the US dollar, mints a whopping $300 trillion worth of stable coins in a technology glitch. There are not enough US dollars to even reach 100 trillion. In a glitch, minted $300 trillion worth of the stable coin backed by the US dollar. Talk about garbage. I understand blockchain. I don't understand cryptocurrency and stable coins. You can't protect your money in this arena. And when it's gone and taken from someone outside of the United States, you have no recourse. You get those calls, you're going to help out the fire department, and they want you to wire something overseas. Don't do it. It's a hoax. Anytime any money needs to go overseas, or they want your account login, password, account number. Once it goes overseas, there's nothing you can do. You want to lose everything? Cryptocurrency and stablecoins is the way to go. Last but not least, interesting article. The FAA lets Boeing increase mass production almost 2 years after near catastrophic accident. We should see a nice run in Boeing coming up for earnings. All right, I've really been on my soapbox today. Questions. What questions do you guys have for me that I can hopefully do some kind of explanation for you? By the way, last week we had someone that I hadn't seen before, and man, for the life of me, I don't see him here today. Hey, but we have Nathan Roberts with us. Nate Roberts will be the 5th registered investment advisor working with Hurley Investments. Nate, welcome to our team. We appreciate being here with us today. All righty. We can definitely, I can do that, Jackie. Will Apple continue? Oh, Apple. Yes, Apple will continue. I will say I don't see it getting above 300. Yes, probably, but it will also sit around $300 for a period of time. Why? It's Christmas. It's Christmas, and things just move at Christmas. 57, 75, I forget what the number is. Can you imagine 75 or, oh, one year was 104? 104 million iPhones are sold in this quarter alone. I can't even comprehend that. Say they're worth, $1,000 a piece. $100 billion of iPhone sales is just, the numbers are staggering. The numbers are unbelievable. So yes, I would think Apple will continue. In fact, in all honesty, if you ask me what's going to continue, Apple, Boeing, Google L, Meta. This is one of Meta's biggest and best quarters. Expect it to go up to 800. Not Tesla. Netflix will probably move higher. Micron will move higher. NVIDIA will probably break 200. Palantir is iffy. Palantir is losing some of its corporate accounts because they're deemed fraudulent. But I could really see Palantir moving. Visa might move. Banks in general. That's not true because banks are going to run into a couple rate cuts, and they just don't. Boy, just don't fare well with rate cuts, to be honest with you. So there it is. Strategy. I think that's MSTR. Strategy Inc. That'll also be one that will most likely move significantly. And then, I mean, we're due for a pullback. We're due for making the market cheap again. So really, if you are an options trader, the next 8 weeks, you could be making bank. Yes, the reason why I put Visa in there, American Express already took off. American Express took off like, I want to say 16%. They only finished above at 10%. It had earnings, and American Express had a 10% run up the day after earnings last week. Abraham, I actually don't follow Uber. I don't know. I'm not the one to talk about Uber or Lyft. Uber's fighting the 50-day. I don't know what to tell you about Uber or Lyft. I don't consider either one of those technology. But phone makers, computer parts, IBM might be a good one that reports on Wednesday. AT&T that reports on Wednesday. I could see those moving higher. GE, I could see moving higher. Texas Instruments I could see moving higher. The AI boom is most likely somewhere, you know, they call it the third, fourth, fifth innings. It's somewhere in the beginning or the middle of its cycle. Will there be some crashes down the road? Definitely. Will it be from the mega caps? No, they kind of own the platforms, so to speak. Will Amazon fall because they suck at their Amazon Worldwide Services? Yep. All right. Any other questions? If not, I'm just trying to stall. If not, I know this was kind of, again, a charged kind of webinar. Thank goodness someone will support our military and pay for it themselves. Again, I'm shocked that someone's calling that unconstitutional. BS. If you want to, you can pay more taxes. The government will accept it. Same reason they will accept someone paying for the military. All right, I don't see anything else coming in, guys. I appreciate you being with me. This will be uploaded tonight. We are really kind of preparing this week to adjust protection that's already in place. Abraham, thank you very much for that email. I just didn't have the time to proof it and to test the numbers or back test the numbers to verify them, but I will most likely have that in next week's articles that I've gone through. All right, guys, hey, have a wonderful evening. Jackie, give me about 5 or 10 minutes or so. Guys, I appreciate you being here. Let's look to a fabulous next 8 weeks as we run into the end of the year. Our returns are looking phenomenal this year. They can only get better this next little run up. Appreciate you guys. See you next Monday evening. Have a good night, and I'll talk to you then. Bye-bye.